The 50% rule is a guideline used by real estate investors that assumes operating expenses for a rental property should roughly equal 50% of the gross income. It's a commonly used tool that allows the real estate investor to quickly analyze whether a property generates adequate cash flow. If a property passes the 50% rule, it means the property is worth looking into further. However, the 50% rule by itself does not guarantee a property is worth purchasing. It's more of a pre-screening metric used to sift through a large number of properties, highlighting the ones with the most potential. Keep in mind, the 50% rule does not include debt service, HOA fees, and property management costs. The equation for this rule is very simple. It's gross income times 0.5. Suppose that there is a duplex listed for $200,000. Each unit rents out for $1,000, making the gross income $2,000 per month. The 50% rule would have you assume that 50% of the monthly income, in our case $1,000, will be necessary to cover all monthly expenses outside of debt service, HOA fees, or property management costs. Most investors will take the results of the 50% rule and run further analysis to determine if a property has potential. For example, some investors will factor in an estimate of the total expenses, including the ones omitted previously, to see if the property will still generate a net income of at least $100 to $200 per door. Others may just want to see whether the property cash flows at all, even if it's as little as $50 a month, because they might be able to negotiate a lower price or better financing terms in order to get a better return. Others still may just want to determine whether the property at least breaks even, as they're more interested in making their profit from appreciation. To sum it all up, the 50% rule is a helpful guideline that allows investors to quickly sift through several properties at once. It's not meant to offer any conclusive answers, but simply acts as a check to see if a property is worth looking into further. If you've enjoyed this video, you're probably going to benefit from this one that goes into detail regarding the 1 to 2% rule. I'll see you there.